We're looking at several bullet points when it comes to underwriting and doing the back of the napkin due diligence to identify if a land deal might be a viable fit. Real estate wholesalers, there is a huge untapped market when it comes to vacant land deals. If you look at the wholesaling ecosystem, think of all the different partners and friends that you have inside of this industry. It's super saturated. Now, if you want to get into a blue ocean with massive opportunities, you've been overlooking raw land and development opportunities for far too long. Why is wholesaling land so profitable? Because builders have a huge appetite for building new subdivisions, especially across the Southeast Sunbelt part of the United States. After COVID-19 shut the world down and all these cities that are highly congested and locked down, like New York, California, people are flocking to these southern regions and the demand for housing has skyrocketed. In the middle of this market shift, after the Feds raised interest rates, it's caused the single-family real estate market to shift, where some of the big hedge funds and institutional investors have gotten more conservative with their offers. But the demand for development opportunities has not faltered or gone down whatsoever. So my goal and directive is to give you guys the concept, the fundamentals, and the process for acquiring these land deals and literally adding a comma to the size of your assignment fees. Let's jump in. In the basic land acquisition process, we're looking at several bullet points when it comes to underwriting and doing the back of the napkin due diligence to identify if a land deal might be a viable fit. Now, number one, first thing that we want to look at is the topo. The topography of the property, it's the placement, it's the contour lines, it's the ebbs and the flows. Is there any wetlands? Is the property in a floodplain? There's several different bullet points and check boxes that we need to check off on when we're going through the topo. Now, the best place that you need to go over to find information on the topography is going to be the county GIS map. It's going to be different for every single county that you're in. Now, if you look at the computer screen real quick, we'll pop on over to the Richland County Assessor site. Now, I have here pulled up, this is a recent land deal that we just dove in on and did some basic due diligence. We're talking with the seller, identifying information and interest, and looking into the next steps to see if this could be a viable option and a fit for a developer. Now, when we're underwriting deals as a real estate investor, our goal is to find any way that we can kill a deal. Why? Because the last thing you want to do is go through the entire due diligence process and have a bunch of money tied up in this to realize that there's one determining factor that's not going to allow you the zoning or any other development opportunities that might arise. So the first thing that I like to do on the map, now all these different GIS maps are going to be different, but as I pop on the top of the screen, I want to give us the ability under the imagery section to go to the Google satellite, and you can see how this has changed the contour. And then from there, I want to go down to the very bottom of this, click on the box environmental, and from here I want to pull up the FEMA flood zone. Why? We need to see if the property is in a flood zone, right? So you can see here, this is our property of interest. And what we're looking at, we have that little stream behind it that happens to put nearly half of this property in a direct flood zone. Why is this important? Well, obviously a builder's not going to want to build a bunch of houses or developments in the middle of a flood zone, right? Another thing that we can look at in this process as well as we go down to elevation, we want to see the contour lines, right? Let's set this to 10 feet. Now what this does, you can see the contours. Every 10 feet drop in elevation, it's mapping this out, giving us clear insight on what the topography actually looks like on this slope of land. And upon looking at the screen, it appears that this land is sloping downward as we go into the flood zone and the stream area. right? So the subdivision that's sitting on this side, dropping down, it's a little bit sloped, going all the way down to this flood zone. So at first glance, again, half of this property seems to be able to be developed, but there's several factors that are probably going to be an initial roadblock for us in underwriting the deal. Next thing you want to check after topography is going to be utilities. Where are the closest utilities for the specific project site that we're looking at? Now the goal is to be able to easily access and tap into existing utilities either through another neighborhood, subdivision, or recent developments in that area. After utilities, you're going to look at zoning. A lot of these development projects are going to require some degree of rezoning for the property that you'll have to go through different city and governing ordinances in order to get this passed through. You got a soil test. In the soil test, you will want to make sure that the soil is feasible for the development that you're looking to take on. You can't build a development on wetlands or a soil that's not going to test. Financial, is this property that we're looking at feasible based on a financial basis, right? So if we're looking back on the map, right, and let's say that we're looking at a specific property, which we'll go back to the one that we're looking at. Let's check the closest subdivision to where we're at, right? And if we pull up some of the smaller lots, we have .2 of an acre, right? That's telling us that for every acre, for a lot of this size, we're able to fit 5 home sites on that property, right? And depending on the area, if we could sell an acre for, let's just say 30K, right? 30K times 5 could equal 150K per acre potential for a developer if this property happens to be in the line of growth. And after we get through the financial aspect and we identify what we can potentially pitch this to one of our developer contacts for, we can reverse engineer the number to identify if the seller's asking price is a feasible option and if we can put together and structure a deal. Contract phase, the contract is going to look a lot different from your traditional wholesale contract, as the developers that we work with prefer a development contract. This is also going to mean an extended due diligence period, in most cases amounting to roughly 6 months. And then lastly, relationships are the key. It takes a lot of time to cultivate pure and rich relationships, especially on the development side of real estate. And our goal inside of this community is to empower you guys to team up, come together in a partnership position where we can put together structure and facilitate these land development deals to get them pushed through and put them on the desks of the developers that we work with. In this shifting real estate market, we've been pivoting heavily into the land development opportunities because as these other wholesalers are in this red ocean fighting for the same scraps as all the other sharks in the ocean, we've identified a unique niche. We've built out the process so that we can come in and snatch up huge deals, adding commas to the level of our assignment fees. To learn more about how you can get involved in this massive wave of opportunity in wholesaling land development deals, feel free to plug in with our community and learn how to take your wholesaling real estate operation on the quickest path to multi-million dollars. I'll see you guys on the other side.